Malaysia's economy has been doing very well in recent years. After the global financial crisis hit, the authorities rebalanced the economy's growth model to emphasize more domestic consumption and investment, and this has shown quite good results so far. In particular, investment has gone up by several percentage points of GDP. And for anyone that has visited Kuala Lumpur and the rest of Malaysia in recent years, you can see the transformation of the country. We in the IMF expect the economy to continue growing strongly in the next several years, and the authorities have several multi-year economic transformation plans that will guide the country through the transition to high-income status. So the sharp decline in energy prices in the second half of 2014 has been a negative terms of trade shock for Malaysia, which is a substantial exporter of natural gas to Japan, China, and Korea. Nonetheless, the economy is well diversified. 85% of Malaysia's economy is about services and manufacturing, and the non-oil sectors will benefit from lower energy costs. Malaysia also has a substantially flexible exchange rate regime, which has acted as a first line of defense, as a shock absorber. So the exchange rate has depreciated, and that adds to exports of non-energy goods from Malaysia to the rest of the world. The Malaysian authorities have undertaken a multi-year gradual reform of their fiscal spending. In particular, they focused on reducing and eventually eliminating those costly and untargeted fuel subsidies starting in 2010. The last step was taken in December of last year when they decided to float the remaining subsidized prices of diesel and regular gasoline. This has generated a lot of fiscal space in the Malaysian system for other more equity promoting and more growth promoting types of spending. In addition, let me say that about 18 months ago, the authorities decided to implement a goods and services tax. This is a value-added tax that helps diversify the revenue system away from the volatile energy-related revenues and broaden their tax bases. So that should serve them well in the future. In 2015, Malaysia is the chair of ASEAN, the 10-member country association of Southeast Asian nations. 2015 is a big year because that's when the ASEAN Economic Community will be launched at the end of this year. The objectives of ASEAN are to promote trade and investment and have freer flow of goods and services and investment throughout the region and promote trade and productivity and growth. And Malaysia is a founding member of ASEAN, so it's well placed to lead the way.